It is that time of the year when you have to file your ITR. People typically believe that if their incomes are below 3 lakh rupees, they need not file an ITR. But that's not true. In some cases, you may even have to face jail time as per the provisions of Income Tax Act. But don't worry, we have got you covered. I'm your friend CA Kanan Bahl, and in this video, we'll be telling you about who needs to file an ITR. If your total income before deductions exceed 3 lakh rupees, you're required to file. But that's not all. You also need to file if you have deposited over 1 crore rupees in current account, spent more than 2 lakhs on foreign travel for yourself or for someone else, or paid over 1 lakh rupees on electricity bills in a year. If you own or benefit from any foreign assets like a bank account or property abroad, you've got to file no matter what your income is. Individuals are required to file their ITRs by 31st July after the financial year end, unless they need to get an audit done. So, for the financial year ending 31st March 2025, you need to get your ITRs filed by 31st July 2025. Now here's the big question. Which ITR form should you file? Since your income may likely include salary, interest, and some property or capital gains, let's break it down. There are 4 main forms: ITR 1, 2, 3, and 4. But here's the catch. If your total income exceeds 50 lakhs, you must file either ITR 2 or 3. Why? Because these forms handle higher incomes and complex sources like capital gains or business income and require detailed disclosures. Let us understand, when is ITR 1 applicable for you. If you have just salary income or interest income or long-term capital gains from equity mutual funds and listed equity shares of up to 1.25 lakh rupees and maybe one house property without requiring to set off losses, ITR 1 might work. But if you have losses from properties or capital gains like short-term capital gains or long-term capital gains exceeding 1.25 lakh rupees a year, or even business income, you'll likely need an ITR 2 or ITR 3. For example, ITR 2 is for salaried people having capital gains or foreign assets, while ITR 3 is for those with business or professional income. If you've got a small business with a turnover of up to 3 crores in case of a business and 75 lakhs in case of a profession under presumptive taxation, then ITR 4 is your go-to, but only if you don't have complex investments or losses. That's it for today. If you find this helpful, smash that like button and share it with your friends and family. Got questions about ITRs or taxes? Drop them in the comments below and I'll do my best to answer. Until next time, keep following Republic and CA Kanan Bahl on Twitter and LinkedIn. See you soon.